Check, mic, check. A, B, C, 1, 2, 3. All right. Let's get this show on the road. All right. Good evening, everybody. Hope everyone's having a great time. Had a good, solid weekend. I hope that everyone had a good rest because this week is going to be wild. I don't know if anyone's looked at the economic calendar yet, but this is what we're going to start off with. This particular week is going to see high levels of volatility. People will be crying this week because it's going to be a very, very volatile week. There will be lots of stuff happening this week, and then on top of that, if you're paying attention to the news, there are many different things that are occurring over in our Eastern Hemisphere that could be cause for many things in the market to collapse or to cause even greater volatility than we might expect. So what's going to be really important this week is that you are trading with your stop in mind. It is very possible that your stops get stopped out this week with manual intervention. So I want you to be careful. Be okay with your levels not working sometimes if there is some sort of manual intervention too. So trade very keenly. Be quite nimble this week, and you should be okay. So let's head over to our charts and take a look and see what we can look at this week. First off, we have our economic calendar. Oops, what just happened there? Put it a little bit too high. Okay, so Monday, you can kind of see October 30th. There's nothing there. Now, there's going to be a couple of things this week on Tuesday, particularly Wednesday and Thursday and Friday. This is going to be an insane week. The reason why is not solely Tuesday's 8:30 a.m. employment cost index, but the fact that Wednesday we have a federal FOMC statement and the press conference happening. So Monday is going to be probably the Monday is, we might see some movement. We'll take a look at the charts and show what we see so far, but we very much so have an idea of where we think we're going, and I think there's going to be a lot of people stopped out before we get there. So with the FOMC statements happening on Wednesday, unemployment claims Thursday at 8:30 a.m., and then last but not least, we have non-farm employment change this week on Friday as well. This means there will be quite a bit of manual intervention this week, so it's going to be a little bit tougher. It's going to be a little bit more volatile. So just be prepared for that and you should be okay. In other news, I am currently finishing up the setup for Johnny Lee Trading, that simple website, so that we don't have to keep going to Johnny Ventures, my parent website. So I will have that done soon, and I'll swap over the links over to that. Good morning, just finished watching your eval method. Not good morning, good evening. Yes, good evening or good morning to you as well, Phoenix. Hopefully that eval session was insightful. I think that goes along quite well with the risk management video, but the risk management video is quite long, but that's not what we'll talk about today. But there is a new video on risk management, and I've created the first version of an Excel sheet resource that I will be updating, thanks to some of the feedback from some other subscribers. I'm looking at the comments and I can't wait to incorporate those feedbacks. I will make that spreadsheet a little bit easier to use in time. So awesome recommendations there. So let's get to it now. The bread and butter for today. So we're going to be taking a look at clean charts today specifically because of where we're at. I will add these a little bit later, but in order to run them through with you, I think it's more pertinent to run through with some clean charts today. So with the monthly, this is where we're at on the monthly chart. So we can kind of see that we went through a market maker buy model. We made it through this fair value gap on the downside, or on the upside. And so we've captured that liquidity and we've started to head downwards to take out some of these areas of liquidity. So what you see here is you see these monthly levels. We see that we came down past the midpoint of this fair value gap and then peaked down below that and then traded back upwards. So from a monthly perspective, remember, this is the October candle. We're about to close that October candle, right? So I anticipate that we will end up coming up a little bit and then heading back downwards. Now, we could spike to as high as this medium, this midpoint here of this wick, given the nature of some of the economic events happening this week. So we need to be very careful this week. What we see here as well is this monthly buy-side imbalance has price remaining, which is just kind of sitting there. Another thing I want you to pay attention to is the midpoint of this wick over here. If I can draw that out for you, you can kind of get a sense of where I'm imagining price will head down to next. Okay, so those couple of areas are going to be key areas that I look for this week. Let's see, that's plus when you share 80% does have juice, 20% waste. That's the plus when you share 80% does have juice, 20% waste. Yeah. Yeah, absolutely. Absolutely. So where we think we're going is we see this huge consolidation range here on the monthly, at that. So we're gonna see which way this manual intervention takes us. Now, something that I've been eyeing for quite some time is this set of monthly lows here. I don't know if we're going to get down there, but there is a lot of liquidity there that's sitting there. And we've pretty much taken out every single area of liquidity coming on the way down. We've come back through and taken out pretty much everything there. And we created a lower high after creating a lower low. So we're still looking bearish, although we can have retracements within a given month. We can certainly have retracements, and we're going to take a look at the lower time frame charts in order to see where those might happen. So now we have the weekly, where you can see we're still well in a premium. You can see that we traded, let me actually keep these candles close together so you can see. You can see that we traded through a weekly buy side imbalance, sell side inefficiency, and a previous high. So if you remember, we pointed these out during the calls. We've traded through this high here. We've traded through to this rejection block, old rejection block, but really I cared that it traded here and through and closed. Now, what does that leave open? So we can pretty much let's zoom in on that weekly, right? So this low here was 14,949.25. This high here was 14,950. So it barely peaked up there by 25, basically one tick, and then headed downwards. So that screams to me that we're still headed lower. But look at what we left open here. We left a little bit of price open to the upside that could potentially get people back on the track of being potentially bullish. So what I'm hoping to see this week in the beginning of the week is some rise up into 50% of this range here that's remaining. And then we'll target the previous week's low, followed by this weekly imbalance down here. So that's where my eyes are taken to, as well as the midpoint of this wick here. And I'll turn on, like, let me turn on the indicators just briefly so we can get a sense of what's here exactly. Oops. Let's try this again. So we've got everything there now, right? Okay, so let's zoom in on that particular week. So you can see this weekly sell side imbalance, very easy to see. You can also see, let me zoom up, this imbalance here from this low to this high. We see that this week just starting to form, so we see that there's definitely room for this to move up into this range before heading any further downwards. Now, one thing I want to point out as well, two things really, and let me do one thing here. And let's find the midpoint of that. Okay, so you can kind of see how the midpoint of this lines up with that 25% quadrant level there. You know, this is very rough, of course, but it lines up with that. So combining that with the fact that the weekly, and you can't see this really well here, but the weekly of this 4-hour range here, remember we dropped over to the 4-hour chart and we found a fair value gap there. It only took out 25% of that. So when I grade that swing, I want to see it go down past that 50% mark and then all the way down to this 14,061. So if I had a gun to my head, I would imagine that this is where I would expect us to expand to at some point this week. That doesn't mean we can't go all the way back up to this other new week opening gap, because I think if we head up to this monthly level, weekly level, and a daily level, then yeah, of course we certainly can. I would be weary of shorts if we passed that premium BISI consequent encroachment up here. I would rather us keep this, you know, nice and open to some degree, this top half of it, and have us continue down lower. But this week is FOMC on Friday or Wednesday and non-farm payroll on Friday. So this is just going to be an insane week, okay? So be very careful, watch your ranges, watch your stop losses, and this area 14,061 is what I'm looking for. So let's remove some of these here. So kind of have that there for now, and we can leave my previous markings open to finish off today's charting. So let's go down into a daily to see what we can see. So on the daily, we ended the week down here, right? So on the 27th, right? So we saw a spike up, and then we headed back down, and this week we've already gapped upwards. In Asia, we've gapped upwards, and we have left what's called a liquidity void on the way out. So that is something that I'm keeping in my mind for a little bit later. I would love to see a Tuesday high again, Tuesday or Wednesday high potentially because of FOMC. I think it's possible during FOMC weeks. The difficulty here is that we also have non-farm payroll, which are two very volatile economic events that are occurring. And so it's very possible that Wednesday could be the high of the week. It's possible that non-farm payroll takes us to a ridiculous high too, that we're not aware of, and then dumps. But I think that it would be preferable if this stayed open here, this part before the old new week opening gap. So to zoom out a little bit, outside of the new week opening gap, the below this 4-hour blue checkbox or blue box, we also have this short-term low, which also serves as the weekly premium BISI high. So remember these two yellow marks are our weekly premium high and weekly premium BISI low. That's what I'm looking for as an expansion this week, and I think that it will probably hit it by end of week if I think we are still bearish, sorry. Why I also think that we are headed down that way is because we have not quite hit the overall upswing's 50% mark, an equilibrium point. And so I still see liquidity to the downside, but I certainly would expect a retracement first before we continued heading downwards. Let's drop down to an hourly chart, see what we see. And now we can kind of see, I think I had pretty much gone through and walked you through price action on Friday. It was a very difficult day, but price went to exact key levels that we mentioned earlier in the stream, and that's perfect. You know, you can't do better than that. For an hourly perspective, though, you can see that there's this gap here, this liquidity void that price has not touched yet. It has zero trading done. There is zero orders, zero buys, zero sells executed during that time. So we anticipate, what do we look at next? We look to see if price could, and I'm going to repurpose these here now that we've already used them. So here's a rejection block that price could head up to. There's that daily SIBI low that we could head up to. There's this here, 14,459, this high, 14,459.25, that it could head up to as well. And ultimately, there are some fair value gaps, small ones, although small ones. There's fair value gaps up this way, and of course, eventually, this breaker here. So we need to see where price heads in the beginning of the week in order to have a sense of what's going to go on, because I think Tuesday is likely to chop, considering the fact that we have FOMC the following Wednesday and non-farm payroll on Friday. So if we end up taking this hourly rejection block, which is, let's call this, let's see, this is the open was 14,373.25. So we'll say 14,373.25, or let's say 373 even. Let's call this a rejection block, buy side liquidity. That's the first thing that my eyes are being drawn to see if it respects that or not, right? The next would be, of course, this high that's over here, if it's able to respect it. That would put us at a pretty nice premium to take out and then head back lower, is what I'm thinking originally. But knowing how FOMC runs, it's going to run out. Generally, it's a two-stage delivery for both of these. The first stage is a false run, and then the second stage after 2:30 is the actual true run. So you can kind of see now that there's a lot of liquidity building to the downside here. Buy side or sell side liquidity here, sell side liquidity there, sell side liquidity there. And most of the buy side liquidity has been taken. There are some items to take out on Tuesday and on Monday and Tuesday, to the point where we could then continue downwards further. But I certainly think that we'll end up heading upwards for the time being. We could always end up coming down and filling that new week opening gap, little gap on the hourly as well. But let's see what Monday gives us. Let's see where it goes on Monday, and then we'll have a better sense of how Wednesday and Friday what kind of stops might they run, basically. So down to the 15-minute, the gap, the week opening gap, this liquidity void here is a little bit more visible. And actually, let me put these up as relative equal highs here. Yeah, so this gap, we'll see if it's traded to middle of the week or late this week. I think that there's certainly room for us to end up trading higher first. Maybe all the way up until this 14,459.25. So we want to see the power of 3 work, right? Accumulation, manipulation, distribution, right? that's what we're hoping for. We want to see some of these buy stops triggered so that smart money can continue to go short. Now, that being said, if we start to see some massive spikes up and above this point here, we certainly could end up moving upwards and continuing to move upwards. But I think with FOMC, things are going to look a little bit strange, and we're going to see a lot of manual intervention in both ways. So again, like I mentioned, be careful this week. There's not really a huge point in going down into below 15-minute mark because we can see mostly everything here. I would say in the morning is when I might drop down into that and see if some of the major price points have not been taken or touched yet, and then I'll develop my bias based on that. So yeah, I think that's really it. You know that my overarching bias on the weekly and monthly is to the downside. On the daily, we certainly see a couple of upside targets here where there's a fair value gap up here combined with this new week opening gap, the old new week opening gap, combined with this monthly, weekly, daily busy high. So it won't be a straight shot down, but we certainly see some untouched liquidity waiting for us. So we'll play this accordingly, and we'll just be quite careful this week. There's nothing happening on Monday, so I would expect Monday to be a little bit less volatile, but then again, Mondays have always proven me wrong. So, take this a consideration with a grain of salt, but observe it on your own. Go see why and where you think higher time frame is taking us, because once you can start to predict that gives you a much higher chance of looking for really great setups on a lower time frame, as they are fractal and they do repeat. Okay, great. So I think that is it for this week's market review. We've gone down into an hourly, into a 15-minute, and ultimately, I don't know. Ultimately, I feel like there's definitely some room to head downwards. So, all right. So, I am very tired. I still have to figure out. I think that's it for today's sync up. We're gonna come back on Monday morning and take a look and see what Asia has given us, and actually that would be worthwhile heading down to the lower time frames. So let's go down to a 5-minute right now. You can kind of see how Asia's been running in this range, right? But it has this fair value gap. So this rejection block, we want to see what happens. I imagine we touch that in London and then head back downwards, or we head all the way up to that daily purple line, and we kind of take that rejection block that's up here at 14,396, and we see if it heads up that way as well. So we want to see we're seeing accumulation right now, but we want to see a manipulation to the upside, kind of like take out these highs maybe, and then continue to short if we are very short. So yeah, I mean, nothing to trade in this Asia range. Not worth your while, not worth your time, not worth your effort, but some gamblers are going to do it, and they're going to wonder why they got stopped out. So yeah, I think that is it. So yeah, some updates on the website and on the new lesson. If you need to go review that risk lesson, I'm actually looking forward to working on that tool, making it a little bit easier to use. Again, thank you so much for the suggestions. I'm going to definitely incorporate those and then continue to release better versions of that. But I wanted to get something out for you to really play around with. And I know a few of you have already played around with that. So thank you. Appreciate you. And appreciate you giving me some feedback on that. And I'm glad it works. I will continue working on Squarespace website. I really hate Squarespace, but it is what it is. I'm going to see if I can maybe send emails and contact through that site. And I know a couple of you joined and got that download from the risk lesson. I'll honor the folks that do not want to be contacted via email marketing. If you select that box when you download the link, I will also try to reach out to folks once I can figure out how to use Squarespace's email thing where they can email people. I will start to also send out weekend insights for the coming week, just so that in case YouTube's down, or in case like in the event of a catastrophic failure on this laptop, I can also go over there and communicate with you as well. So in the beginning, I think I'll just continue to do a weekly insight perspective. I'll try. This is kind of new to me, so I mean, I'll try and see if that can turn into something different in the future. But yeah, I mean, other than that, we're gonna continue looking at our journey. For those who are curious as to where I am in that journey, so far from the initial prop firms, we had, remember that when we first started this, we had 20 total performance accounts. If you've been following me, you know that I kind of got tilted one day when I had 2 hours of sleep and a very, very high pressure, high stress environment, and I did not trade well, and I broke some rules. So I'm down to 16. But out of those 16, 3 had started in heavy drawdown. So 2 were minus 1,500, 1 was minus 2,450. So you can only have minus 2,500 on those performance accounts, right? Before they get blown. So on those accounts, one account is now from minus 1,500, it's at minus 900. And another is from minus 1,500 to minus 961. So we are showing that we can pull back from drawdown with appropriate risk management. So that risk management lesson is very important. I can't stress that enough. I wish somebody had told me to really, really sit down, study it, do the math, because it really does lower your equity curve. So that third account that was minus 2,450, it's down to minus 2,203. So those are all seeing good growth as best I can. Again, I'm only risking 1 micro, so we're building those up. And then on the other accounts, there are 4 accounts that are around positive $500, and then another 4 which are like positive 200-ish. So slowly building up. I think there was a question, someone, I forget, I'll have to go back and look up the name, but there's a question as to the risk spreadsheet saying that this goes up to $1 million in profits. And the question was, is that even possible to achieve? Absolutely. Absolutely it is. But you have to survive long enough and be consistent long enough to be able to get there. So, yeah, just wanted to throw in a quick little Easter egg for those who are really curious about that. As I do title my recordings, journey from 0 to $1 million. I like to give any progress that I have, and I love it. I mean, I'm risking 1 or 2% max on most of these trades, and I'm able to really reduce my equity curve and stay in the game much longer. So I think that's it for this week. Again, thank you for the support that you've given me. For all you, and I don't know, Phoenix, if you're still here, love having you on the stream, love shooting the shit with you. I can't wait to see your growth over the next year or two. I can't wait to see your growth, and I am really looking forward to growing together, and I can't wait to continue to maybe produce some valuable content and create some valuable tools for you to use and for me to use as well, of course, but for you to use as well. And yeah, we'll just take it bit day by day. We'll continue. Um, yeah, this is a real time learning. So congrats. Thank you. Have a good night. Yeah, absolutely. Have a great night too, Phoenix. We're gonna close the stream for today, and then we'll see what happens over Asia and over London. So keep that new week opening gap on your charts if you can. You can see it on my charts here. You can see it very clearly. I could put the midpoint here as well. So I'd recommend you put that midpoint on your charts as well. And make sure you label it, make sure you have something like I do where you have current new week opening gap, because you can then have this over whenever you get into, let's say this is going to be, the next day, we'll be able to move this all the way over to 7 o'clock, and we'll have that there, and this black line and that black line, right? So you'll have that there ready to go, and that it's this week's current new week opening gap. So there's a whole lesson on that in ICT's 2023 mentorship. So if you are curious as to why I put this on my charts, you can go to that lesson and learn about it. There's a couple of lessons on that, but long story, if I were to simplify it as best I can, I keep that on there because the algorithm refers to that any given week, and it refers to old ones as well. So what you want to do, and you'll see this in my charts as well. Let me go to a 4-hour chart to depict this. It'll be easier to see. So on the 4-hour chart, you can kind of see that new week opening gap high I've marked there, right? Then you see this week's new week opening gap. Then you see this week's new week opening gap. And you see, where's the next one here? This week's new week opening gap. This week's new week opening gap. And then lastly, this week's new week opening gap. This takes us back to the last week of September. So that's about 4 or 5 weeks of new week opening gaps. And you can kind of, backtest this yourself, but it is crazy how frequently price is drawn to one of those like a magnet. So that's one of my little Easter eggs for you, and something that has helped me immensely. Think about how algorithm refers to price in the beginning of the week and at the end of the week, and at other weeks as well. So keep that in mind and have that on your charts. We will come back tomorrow morning and see what happens during London, and see if there's any plays that we can grab. Now, be careful because we are in this area of consolidation, okay? So we're in this area of consolidation. We have huge news drivers on Wednesday, so likely we will eventually this week, we might trade up to this mitigation block here, okay? This is one of the clearest things that I can see right now. A mitigation block in what is this, right? What is this here? Right here. From that high to that low. That's a sell side imbalance on the 4-hour chart. So I like to have that marked out on my charts. You don't have to on your charts, but another thing that is there, right? I see this here, which kind of lines up very closely. That low right there. So this is the kind of let's put buy side liquidity here. This is a kind of signature. Let me see. The ICT mentions that opening week gaps are you for a week in that area. ICT mentioned that opening week gaps are you for a week in that area. So I don't, not sure if I know exactly your I might be reading this wrong, but yes, ICT mentions that new week opening gaps are used for that week within that week's range. Absolutely, they are referred to. Yeah. You can kind of see with like for example, you can see last week's where we opened the week, we dropped down, so got some people short. We busted up, got some people long, thinking they're gonna miss out on the next run up, right? And then we traded up into a hourly sell side imbalance like we had mapped out, and price ends up, remember, in any given week there's an opening, there's a high, there's a close, and a low, right? New week opening gaps are good for a week. Yeah. They're definitely good for about a week, but if you go back and study those lessons, there's some intricacies there that you might miss the first time around. And that's why I'm hinting towards you to keep those there for about 5 weeks is about all you need. That amount of data, like you can try going back, but eventually they start getting more of a clutter to your charts than they are helpful. So keeping them on for about 5 weeks is a nice sweet spot. So you can look at that, back test it, and you'll see why I refer back to that as well. So on the 4-hour chart, we see this mitigation block here, right? We see this 4-hour sell side imbalance. We see that price has a gap that we've traded up into and back down, and now we have this sell side liquidity up here and up here. So these are 4-hour areas of liquidity. So if we're heading up here, I anticipate we'll head up to this mitigation block as well, since we have not had price come up to this yet, and we have not had price come up to this yet. Those are the only two imbalances that I see, and I would like to see this remain open. We don't want to see price spike all the way up to this, although it can. We don't want to have price spike up to it. Let's see, are good for the week, but you should keep those on. Yes, correct. Yep, you got it, Phoenix. So that's what I see on the 4-hour. Now let's go back to the daily and see what that looks like on the daily. Okay, this is why we do higher time frame to lower time frame analysis here. So look at the daily here. You see on the daily that we now have what's formed here. We have a new fair value gap. We love these. And it's a daily fair value gap. So we want to do a daily. We want to have this on that low. And then we also want to have one on this high here. So if you can't see that, so from this low, there is only sell side. It's an imbalance, right? And then from this high, from the low of this candle through the body to the high of this candle is a daily fair value gap, which has not been traded to yet. We formed it as we were expecting. We formed that last week, and I mentioned this at the beginning of the week. I would anticipate that we form this and leave it open for us to trade back up to it at some point. And we did, and we most certainly did. In fact, I was thinking we might trade up into it on Thursday, but we ended up just dropping. So this week, this is where can we possibly trade to? Well, this area on the daily fair value gap is definitely a possibility. The top of that gap happens to be at the midpoint, the consequent encroachment of this wick as well. And so that's a lot of confluences that I see starting to come together. And so I certainly think we'll reach up to here and reach up to here for sure. Will this serve as a mitigation block, or will we trade up into this area a little bit? I don't know. Let's see. But it's for us to have a initial manipulation upwards, for us to have a larger distribution downwards. I anticipate us being able to at least trade above here and trade into that volume imbalance for the daily. I think that that's definitely feasible, and then we can maybe take. I would like for FOMC for us to maybe take this and then take this daily fair value gap out. That's in a premium, and then take us downwards. That's what I would love to see. And then I would love for us to even go further, because what do we see pretty close by? Well, we have this upswing equilibrium 50% mark, and then a 3-month discount right beneath it. So, and then a 3-month BISI discount, BISI high. I might have that labeled wrong. Let me find out. So BISI high, that's a BISI low, so my bad. I knew it. So you can see these giant 3-month levels. So when you see a 3-month, like a quarterly fair value gap, you better be putting that on your charts as like big red flashing, I am liquidity. I need to come back here now. Like, you need to be thinking like that if you're gonna look for higher time frame pools of liquidity. So that's what I'm looking at on the 3-month, and that's what I think we're gonna trade to on the 3-month as well. So you can see this is an upswing. This is the midpoint from down here to here. This is the midpoint here, and below that price is where institutions are allowed to buy, because it's in a discount price. Now you likely will see some head down into this area, but, and let me check one more thing here. Something is incorrect here on the 3-month. Let me fix that real quick. That is a high. There we go. So 3-month high, 3-month low, 3-month high, 3-month low. Okay, let's go back to the daily there, so we can see those clearly on our charts. We can see that we're going to head down maybe to some of them, maybe not all of them, but some of them for sure. So macro still bearish, but we need to retrace first. Yep, and there's your weekly review, weekly and anticipation for next week. That is it for today. I'm going to close the stream now, and I'm gonna go do a little bit of work on the website, and I think that's it. Call it a night. Hopefully this was helpful. Hopefully this was insightful, and appreciate all the feedback again on the videos. Thank you so much. I think a lot of you have really been helping me out by liking the videos and joining the streams and watching them as well. And I know I'm not on the streams, but oh, Nicholas, yeah, nice. Thanks for having. Glad to have you, man. Have a good night, brother. But yeah, really appreciate you joining the videos, liking and subscribing. Like, it helps me so much. I can't even like fathom how right now I think we're at 345 subscribers as of today, which it blows my mind. So I would not have been able to even dream of having more than the 23 people that I started off with, just asking them to like the channel. But this is really near and dear to my heart. I love this, and I can't wait to continue this journey with y'all. So have a good night, get some good rest, get some good sleep, and we'll see you hopefully around 7 for that as we prepare for tomorrow. Remember, there's no economic drivers tomorrow, so whatever price is doing, the algo is just going to do what it does. So with that, have a great night. We'll talk soon. See ya.